Good evening, good morning, good afternoon. I guess first of all, just to say a big thank you to ISKO for inviting us to talk, and also to Eugene and Sharon for putting the event on. We're really excited about this evening's proceedings, really excited to show some of the things that we've been working on over recent months, but also to kind of leverage the wisdom of the community, and you know, be given some feedback in areas, and hopefully there's not too many kind of gaping holes in some of the stuff that we'll show. I think it's fair to say that neither myself nor Dan necessarily consider ourselves kind of taxonomy pros, although we have worked with kind of knowledge graphs and connected data technologies, semantic technologies for a while now. And we are a team of practitioners at Neural Alpha, so a team of kind of knowledge engineers, data engineers, full stack developers, data scientists, who are kind of reveling in working in these technologies day to day. So in terms of who Neural Alpha are, we're a sustainable fintech consultancy, and we develop custom data and software solutions for the financial industry. We're predominantly based in London, although we have a couple of people based further afield overseas, including Dan, who's joining us this evening from Stockholm. As I said, we specialise in essentially trying to kind of inject connected data technologies and ESG into often fairly traditional requirements within the financial industry. So things like portfolio management, investment research, risk management. These are areas that historically have predominantly been kind of spreadsheet based in finance, and you know, very relationally kind of focused. So we specialize in kind of bringing them into the connected data space. In terms of the agenda for this evening, we wanted to talk a bit about some of the projects that we've done within Neural Alpha over the last 6 years, to also talk about the latest platform that we're developing, which is a sustainable investment knowledge graph called Responsible Capital. We'll spend about kind of 30 to 35 minutes kind of talking through the kind of concept and some of the use cases, and you know, things that we've found have worked well and other challenges, and then we should have about kind of 10 or 15 minutes for Q&A at the end. So in terms of the agenda, we're planning to run through a kind of bit of an introduction as to, you know, why taxonomies have become a kind of area of interest within finance, you know, why regulators are bringing them to the table, why people are starting to use taxonomies. We'll talk a bit about how taxonomies fit within our knowledge graph architecture, so within Responsible Capital. We'll also give a bit of a demonstration of some of the data visualization tools that we've developed on top, and then also touch on some of the challenges. So if we can move on to the next slide, please, Dan. So in terms of some background about the kind of types of projects that we typically work on, or we have worked on in the past at Neural Alpha, I guess knowledge graphs are quite a wide space, and there's many different you know, use cases or many different applications that knowledge graphs can be used for. It's fair to say that a lot of our focus within the ESG space has been on the E historically. So the E being environmental. So I guess for those that are, I'm sure probably everyone is familiar with the term ESG because it's everywhere these days. But for people that are not so familiar, ESG stands for environmental, social, governance, and it's essentially an acronym for a framework, a set of tools, techniques, data sets by which the financial industry incorporates sustainability into investment and lending decisions. So both on the buy side, in terms of asset managers, asset owners, pension funds, but also on the sell side, so on the investment banking side, and also the lending side in terms of corporate banking. So as I said, a lot of our focus in terms of applying knowledge graphs in this area has particularly been on the E. We've done a number of projects looking at things like the environmental impacts of forever chemicals, also ocean plastics, looking at things like coal mine development and ownership, biodiversity loss. And particularly, we've spent a lot of time in recent years applying knowledge graphs to the topic of deforestation and supply chains. We found that, you know, that particular use case is a very strong use case, particularly for graph databases, where we're providing tools on a daily basis that are used by some of the world's largest asset managers and banks to screen portfolios and incorporate deforestation risk into lending decisions. So looking at things like how investors are exposed to deforestation associated with beef and soy and palm oil, and how financial institutions can conduct screening and develop policies and other solutions. So moving on to the next slide, I think Dan's going to take over at this point.
Sure. So I guess I want to talk a little bit about the taxonomy soup that's going on in the ESG and finance spaces, because they're poorly understood and remain underutilized. So in our work, we centralize these taxonomies to build data products and tools for financial institutions and develop solutions for hard problems like portfolio monitoring, due diligence, and regulatory compliance. By embedding taxonomies at the core of what we do, we're able to work towards those solutions for multiple regulations concurrently via the same underlying knowledge graph. And as you all know, the heart of any good knowledge graph is its taxonomy. And whilst all of the companies, institutions, and organizations with logos pictured here might not have knowledge graphs, their taxonomies inform and map onto our own. So here we've divided the taxonomies in the ESG space into three different categories. I guess the backbone of this soup, if there is a backbone in soup, are industry classification taxonomies. So industry classification taxonomies help financial institutions classify the primary and secondary activities of companies and instruments into sectors. These classification systems are widely used by investors, analysts, and researchers to understand industry trends, can compare companies within and across industries, and make investment decisions. In recent years, the relevance of industry classification taxonomies to ESG considerations has become really very evident. The ESG issues facing a company can vary significantly depending upon the industry in which it operates. So in this way, industry classification schema can be used in conjunction with regulatory taxonomies like the EU taxonomy pictured here, among others, to classify what percentage of a company's revenue can be considered green or not, or with regulations like SFDR to understand if the aim of a fund is green or not, and therefore if it falls under relevant articles 6, 8, or 9. So let's make this a little more concrete. I suppose companies in the energy sector are much more likely to face environmental risks related to climate change and carbon emissions, whereas companies in the healthcare sector may face social risks related to access to affordable healthcare. Another function these regulatory taxonomies in the middle here fill is to signpost investment to activities that are not formally covered by existing industry classification schemes. So an example of this would be something like wetland restoration. The last category, industry-led taxonomies, are built out by industry bodies like those displayed here to build out taxonomies not too dissimilar from the previous category, but the difference is that they're elective to report against. They very often thematically extend industry taxonomies, industry classification taxonomies, for example, into the realm of climate bonds, or in the case of SASB, classifying which issues for which sectors are financially material for investors. So we integrate and leverage these taxonomies for a few different reasons. We do so in order to achieve interoperability, so enabling regulatory compliance across multiple jurisdictions. Integrating them also allows us to accommodate for different perspectives. So some issues are financially material in some regions, but not in others. These tags also enable us to link in heterogeneous upstream data sources. So by that, I mean disclosure standards may use different industry classification schema. So by integrating these taxa, we further enhance our interoperability. Just going to go to the next slide here. So to make all of these taxonomies that I showed on the previous slide, and several more, didn't want to crowd it out too much, play nicely together, we use Graphology by Graphify as our taxonomy and ontology management tool. So on this slide, we're showing Gemit, which is one of the taxonomies that we map onto our own responsible capital ESG taxonomy. So we find Graphology to be a very lightweight tool, and it enables ESG specialists and researchers who don't have deep expertise in knowledge engineering and knowledge management to create, map, and curate collections of taxonomies. At the core of this web of taxonomies, as I hinted to earlier, lies our own hand-curated ESG research taxonomy. This gives us really great control and precision when it comes to things like sector impact, and enables us to model the taxonomies mentioned on the previous slide at the appropriate depth and not make bad one-to-one mappings. So how do we use these taxa? Well, by relating them to each other and our own in-house systems, we're able to connect data of various types to meet various project specifications. So modern financial ESG frameworks use a variety of tools, techniques, and concepts encompassing key issues like financial materiality and double materiality, stewardship and engagement, exclusionary and inclusionary approaches, as well as things like thematic investing. So by leveraging our ESG taxonomy as the backbone of our knowledge graph, we can give a full 360-degree view of a company, fund, instrument, or sector when we leverage data, a wide variety of data types. So I won't touch on them all, but I want to walk you through some of the data types that we use so you can understand how they help us analyze companies and sectors. So starting with unstructured data here, pictured in gray, using natural language processing, we ingest into our knowledge graph regulatory filings. So often these filings really directly reference the taxa discussed in previous slides. So that's quite simple to bring in. But something like news, reports, academic research, that sort of thing, quite a lot more challenging to integrate because we infer the implications towards the regulatory taxonomies via our own in-house ESG research taxonomy and natural language processing. So if a company is repeatedly appearing in the media in connection to an ESG issue, like let's say water pollution caused by oil spills, then this links up to the backbone of our internal taxonomy and is further linked to regulatory taxonomies from there. We also integrate structured data sources here in green. How these interface with our taxa is varied. So, for example, supply chain relationships, legal hierarchy data, these add context and enhance the reach of the responsible capital product. Whereas things like scores, ratings, memberships, certifications interface in a slightly different way. So I can give a clear example here of if a company has a poor ESG score across multiple different data sources and ESG data scoring providers due to repeated sanctions about let's say excessive sulfur dioxide emissions at a coal power plant. Well, that's the sort of thing that we're able to take into account. We also leverage the physical assets that a company owns. So facilities that might produce things like chemicals, sites like mines, smelters, power plants, that sort of thing. We accentuate this ownership of these facilities with geospatial and contextual data. So overlaying risks for various environmental and social issues, be that something like runoff into rivers of these chemicals, carbon emissions at that site, biodiversity risks caused by deforestation, or exposure to various social issues. I'll hand over to James now, who'll show you a little bit about how these data integrate with and inform our taxonomy development and how this works to make the responsible capital platform.
Cool. Thanks, Dan. So this is a high-level architecture diagram, just kind of touching on how the taxonomy forms a kind of key loop within our architecture for how we kind of add further context to some of the data sources that we work with. So if the responsible capital kind of donut, I've never called it a donut before, but it is clearly that shape. If the donut is our knowledge graph with many different taxonomies that we've touched on embedded, one of the things that we often do is we use taxonomies as a way of extending our knowledge graph, so particularly with unstructured data. So we use the SKOS taxonomies that we manage, the preferred labels, alternative labels, different language variations of terms as filters for gathering news from gathering data from third-party sources, such as news hoses, of which there are many, now available in convenient API forms. So we use our taxonomies to go out and gather news that we think is relevant to our domain, the ESG domain, and then we apply various techniques to try and process that content, because it's often very, very noisy. And I guess this is where, for instance, news differs from, say, academic research, where it's, there's a long kind of track record in academic research of, annotating papers with, metadata and vocabularies. Obviously, news, we don't have any of that, so we have to apply different processing techniques to turn it into something structured and more useful. So we use a variety of techniques there. Natural language processing is one of the core kind of suites of tools that we use. We use a number of pretty conventional techniques nowadays: entity extraction, relation extraction, concept extraction, topic modeling. We also use machine learning to identify clusters of what we consider highly relevant news, and then outliers which we purge from the database, which is typically news that is less relevant to the things that we're interested in. And we're also increasingly using large language models to perform some of the cleaning and also some of the kind of wider knowledge graph construction techniques. So once we've done that processing, part of what that then informs is a loop for us updating the taxonomies. We've gone out and we've got content based on how we understand the world at present, but it's like painting the fourth bridge, maintaining our taxonomies, and we're always adding new content to them, whether it's synonyms or other terms or new concepts. And this is an area where we extensively use the Graphology API, but we've also developed a number of in-house tools to essentially recommend updates to our taxonomy. And essentially what we do there is we take updates, we post them to Graphology, and then finally we have a human in the loop, an ESG researcher such as Dan, who then reviews those recommendations and makes the update to our taxonomy. and thus the process is improved the next time we go out and fetch content. And ultimately what that leads to is on the right-hand side, so a number of solutions. So some of them quite well-established solutions, things like risk management and portfolio management, have long been features within the financial industry. But I guess where we're increasingly seeing a lot of interest from people is, and particularly a good fit for knowledge graphs, is around having this rich contextual data, this rich kind of 360-degree view on a particular company's ESG situation. So this is in areas such as, for instance, due diligence, where you have emerging regulations, particularly in the EU, things like the corporate sustainability due diligence legislation, which is looking more at things like human rights abuses in supply chains, environmental issues. There's also a deforestation due diligence set of legislation that's coming out where people have to look at the ESG credentials of different companies. Similarly, policy development is often, and stewardship are often incredibly kind of subjective, context heavy areas where we feel knowledge graphs play a key role. And then our products, Responsible Capital is predominantly a data products platform. So we produce data products in various formats, JSON, JSON-LD, also flat files, which is probably the most common data format that the financial industry works with. We also offer API services via a GraphQL API layer. And then we also have a kind of rapid prototyping approach for building kind of front-end tools, such as profiles. And I guess this is one area where knowledge graphs really come into their own, is integrating disparate data. There's not many kind of solutions out there that are able to take the very wide variety of ESG data and integrate that into single profiles. And then we have the more kind of classical things, which I'm sure this group are probably much more well-versed in than we are. So obviously, taxonomies, one of the strongest use cases around kind of faceted search, semantic search, content recommendations, and so on. And then moving on to the next slide. So once we've done all of this processing, this is what our knowledge graph kind of looks like, this kind of very tidy utopia here where all the data is perfectly clean and makes sense. Yeah, I wish it looked exactly like this. Often it's a little bit noisier than this, as I'm sure people can imagine. But essentially, having the data in this type of knowledge graph and having lots of taxonomies coexisting and mapped into each other with all of the semantic relations that are embodied in standards like SKOS, enables us to do a lot of interesting things and answer a lot of interesting questions via graph traversals. So some of the things that we kind of are typically doing once we've got the data into this shape are things like in the stewardship space and the policy development space. We can help investors to determine what types of policies, for instance, they might expect a company operating in a particular industry to adopt. So for instance, if we're deeming deforestation to be a material issue for an industry such as commodity trading or food and agriculture, well, what are the kinds of policies that a company could adopt depending on where they sit within the kind of market segments within that industry? If it's an upstream commodity producer, it might be something like a zero deforestation commitment. If you're downstream and you're a supermarket, then there might be other commitments or policies that would be more appropriate, things like traceability policies. Other examples of the kinds of things that we typically do when we get the data into this shape are things like traversing through supply chains, looking for human rights abuses, that could constitute things like UN Global Compact signatory breaches. So a kind of example of this could be looking at, say, an electric vehicles manufacturer, looking at where they've disclosed that they're sourcing cobalt from, and then looking at the risk of, for instance, child labour associated with those locations, which will vary from place to place. Materiality is also a key thing which Dan touched on earlier, which we spend a lot of time writing different queries trying to answer within the knowledge graph. So for example, we might ask, okay, for a particular standard, what are deemed to be the material issues for a company or for a sector? We might also look at, for instance, green revenue classifications. So what percentage of a company's revenue would we consider to be green? Or even within a particular regulatory standard. So what would we consider green subject to, for instance, the EU regulatory taxonomy following their screening criteria? So there's lots of knowledge graphs offer lots of flexibility, and taxonomies are a core part of that. So moving on to an example, we can show a bit of an example of where we've extracted some of this data and put it into a commodity business intelligence tool. So this is using Tableau to visualize some of the news data that we've acquired and processed through leveraging sustainable finance taxonomies. So you can see that we've extracted a large volume of news. We've extracted the companies, the industries referenced within that news, the geotag locations, the document sentiments, and also the sustainability concepts. So the kind of ESG issues or the ESG solutions, as we call them. And then there's color coding from red to negative sentiment, green to positive. And perhaps unsurprisingly, banks, the news is predominantly negative, and also oil companies. We can see, in this case, the banks, a lot of the news, I think this was January, the month of January news that we were extracting here. We can see a lot of it's talking about kind of Extinction Rebellion protests. And then perhaps moving on to another sector, we can see, I think it's the chemicals sector, which within the TRBC, Thomson Reuters business classification taxonomy, is called diversified chemicals. We can see, most of the news here is related to DuPont, with other companies also referenced. And we can see, I guess this is one of the slight limitations of working with data in a tabular format or with Tableau is, ideally you would want to show this as a kind of graph or a nested structure. But we can see, there's a lot of news here essentially linked with forever chemicals and forever chemicals litigation. These are some of the most kind of common forever chemicals that are listed here. Perhaps we can pause there and move on to some of Dan's content, but hopefully it's quite a kind of, it's a limited way of viewing the data, but quite a kind of powerful way as well.
Yeah, thanks, James. I guess, given that we're speaking to a lot of knowledge management experts, one of the things we wanted to touch on here are some of the challenges that we face on responsible capital, given that we're centralizing taxonomies. So I'll try and go through these quickly here, but I have a tendency to go into too much detail. Forgive me if I do so. So firstly, scope versus scale. As James touched upon earlier, constraining noise can be a challenge. As we all know, sustainability touches on every aspect of life. So distinguishing what's important to know and what's important to model from a financial perspective, preventing scope from exploding is a challenge we struggle with. From time to time, buzzwords and jargon rear their heads too. So I'm talking about nouns that a group have invented versus understood concepts. deciding what is real or not plays into the selectivity of our taxonomy, but it's also a little subjective from time to time and hard to define what's real versus what's hand-waving. It's also true, probably, that our internal research taxonomy may have a few too many top concepts. For example, Agravoc has around 25 top concepts, and at the minute, I won't say how many, but we're in excess of that. It's hard to know when we should shoehorn concepts into the existing structure or when we should just let the taxonomy grow naturally. Another thing we wonder about is, when do we add instance data to our taxonomy and when we avoid doing that? So we don't model everything within our taxonomy, but we do model things like initiatives and coalitions. So how large does an initiative or coalition need to be before we model it? And when do we allow instance data in? Along similar lines to those two previous points is when we should introduce new ontological elements to our taxonomy. So we started very much as a classic SKOS taxonomy, but over time we've introduced proprietary classes and our own relationship types. It always feels like a really big juncture whenever we hit a moment like that. A sort of more background existential question we deal with is if we're building taxonomies or thesauri. We're not letting that consideration steer us too much, but should it be making a difference to how we work? I guess another point there is related to the specificity of our taxonomy versus polyhierarchies, and whether we model concepts multiple times in the taxonomy or model them generally and try to infer links and connect it all up. So I guess an example there might make that a little bit clearer. We were talking about diversified chemicals, and a key concept in that industry is that of forever chemicals. So forever chemicals have impacts depending upon the substrate that they're in. So forever chemicals in water can, in a sense, be treated differently to forever chemicals in soil or in air. So do we model this differently? Do we model this as waterborne forever chemicals and airborne forever chemicals? Or do we just have forever chemicals and give it multiple parents? Right now, we have a bit of a mix of both approaches, and there's unique challenges associated with that as well. I guess our embracing of occasionally embracing chaos, or not so much chaos, but ordered chaos, connects nicely with the financial sector's obsession with balanced hierarchies. So this balance, whilst it's really aesthetically pleasing, it ends up duplicating concepts, and it makes it harder for us to make sure that we match in at the right level. And sometimes those levels aren't even really that well defined. And the truth is that balanced hierarchies are just much rarer in reality than financial services seem to think they are. One unique complexity that gets introduced as a result of working with financial data is how we turn things to strings. It's the foundation of semantic technologies, adding structure, attributes, and classes to strings to help us tell machines what they are. But most of the sources we work with are just strings, not things. We don't get told what they are, and we have to go through a process of classification, which is expensive and time-consuming. We don't end up resolving everything to a thing. Sometimes it is just a string. We touched earlier on large language models, which, they're everywhere right now, and for good reason. They're also a fantastic productivity aid for fleshing out taxonomies, and they're becoming an integrated and central part of our process. They're great at providing definitions for concepts, alt labels, suggesting new ones, but when we get really specific to a niche or a domain, this idea of hallucinations comes up, and large language models can just lie to our faces in extremely convincing ways. So catching these errors early is a challenge and a critical one, given that we're going through a recursive process. So we've got to make sure to catch those before they permeate through our taxonomy. Weapon to deal with that is pure common sense and checking your work. A final challenge, I guess, we can round off with here is that of query and storage performance and simplification as a sub-concept of that. And I don't think I need to go into too much detail here, given that we are in a room of experts. And I'm sure you guys know just about more about this topic than I do. So I suppose that brings us quite nicely to the end of our presentation, unless you have something else to add, James. And at this point, sorry, would be happy to open the floor for questions if there are any. Thanks so much for listening to us.